Hey everyone, welcome back to the deep dive. We're diving into some really interesting tech today. You know how we've been looking into Brolly recently?
Yeah.
Well, today we're going to unpack the technology that powers the platform, especially their dual operating model.
Cool.
And full disclosure, I'm actually part of the Brolly team, so I've gotten a pretty good look under the hood, so to speak. The way this platform is built is really designed to scale and solve some of those fundamental marketplace challenges you always hear about, right from the start, actually.
Interesting. You sent over a bunch of materials about Brawley's architecture.
Yeah.
And yeah, the thing that really jumped out at me was this idea of balance,
Right.
like balancing user demand that's both borrowers and lenders from day one and on a national scale.
Okay, so let's dig into that whole balancing act a little.
Yeah.
You know, when you've got any platform that's trying to connect two different groups of people, it's always that classic chicken and egg problem.
Yeah.
Think about Uber in the early days.
Yeah.
I mean, they were constantly scrambling to have enough drivers where and when riders needed them. It was a mess.
Yeah, for sure.
Or Airbnb, remember, they were working city by city just to get enough hosts and properties to even meet the basic guest demand.
Totally.
Even those dating apps like Tinder, because,
Yeah.
Yeah.
they had to figure out how to solve those localized matching issues. It took them ages.
It's funny you mentioned those companies because they all basically started regionally
Mm.
and then like slowly expanded.
Right, yeah.
But Brawley, and this is what's fascinating to me, it's like they're going national right out of the gate.
Yeah.
They want to connect borrowers and lenders across all of Australia, not just like little pockets here and there.
So how does the technology actually make that happen? Like, what are the foundational pieces?
Okay, so Brawley, at its core, is a community lending platform.
Okay.
They do peer-to-peer lending, but with a big focus on security.
Okay.
So it's about connecting individuals and institutions that have capital with people who need loans.
So making it more accessible for everybody, essentially.
Exactly.
Peer-to-peer lending is not a brand new concept or anything, but this national scale from day one thing. That's pretty different.
It is.
So how does their dual operating model, whatever that is, play into that?
So the dual operating model basically means they're building and growing both sides of the marketplace at the same time.
Okay.
The lender side, so the people and institutions providing the funds, and the borrower side, so the people who need the loans.
Gotcha.
And that's really important for stability. You can't have one side like way bigger than the other.
Makes sense.
It would just, the whole thing would fall apart. So Brawley's all about what they call symmetrical growth, trying to keep those communities balanced.
So if someone applies for a loan through Brolly, you're saying there's already a good chance there's enough money from lenders to actually fund it?
That's the idea.
Yeah.
It's all about making sure there's always money available, no matter where you are in the country.
Okay, I get it. So
Okay.
how do they make sure that happens?
Well, that's where their dual capital strategy comes in.
Okay.
So instead of just relying on, everyday people lending their savings, which is what you might think of with peer-to-peer lending,
Yeah.
they also bring in institutional capital. So that's investments from bigger financial organizations.
So it's like a mix of both.
Exactly. And by diversifying like that, they're not putting all their eggs in one basket.
Right.
So it makes the whole platform more stable, and they can offer loans more consistently, across the country. And they're aiming for 50% of their funding to be from institutional sources by year 5.
So basically a mix of regular people and big institutions.
Exactly.
Okay. So it's like a safety net almost.
Yeah, you could think of it like that.
Okay, I get it. That makes sense. So how does the technology actually work? I mean, what's the infrastructure that makes all of this possible?
All right, so let's start with how money actually moves around.
Okay.
They've got a payment gateway that's powered by a company called Manuva. And this handles all the real-time payments, deposits, withdrawals, all that stuff.
So like when someone gets approved for a loan, the money just appears in their account.
Pretty much. And what's really cool is that Manuva is like the leading provider of this thing called Payto in Australia.
Payto.
Yeah, it's like relatively new.
Yeah.
It basically works like a real-time direct debit.
Okay.
So you get instant settlement and notifications.
Oh, wow.
So whether you're a lender or a borrower, you know exactly what's happening with your money right away.
That's super important for something like this.
It is. Speed and efficiency are just crucial for a national platform.
Especially when you're dealing with people's money.
Yeah.
So, okay, we've got the money moving around quickly and smoothly,
Right.
but how do they make sure it's all legitimate?
Yeah.
Like with verifying identities and preventing fraud and stuff.
Okay, so for that, they've partnered with a company called Frankie One.
Okay.
And Frankie One provides a really robust platform for all those KYC and AML processes.
KYC and AML, what's that stand for again?
Know your customer and anti-money laundering.
Oh, right, right.
Basically, it's all about making sure they know who's using the platform and that everything's above board.
So it's like a big security check.
Yeah,
And they
exactly.
do this for everyone.
Yeah. It's essential for verifying identities, complying with all those financial regulations, and, of course, preventing fraud.
So that's how they build trust and make sure the platform's safe for everyone.
Exactly. It reduces their regulatory risk, too, which is huge when you're operating nationwide.
Okay, so we've got the payments and the security, but how do they actually decide who qualifies for a loan? Like, what are the criteria?
Okay, so this is where a company called Basic comes in, and then Brawley's own risk engine takes over.
Okay.
Basic's really interesting. They gather and analyze a borrower's financial data.
Oh, okay.
They give Brawley a real-time snapshot of their financial health, basically.
Yeah.
And they do this through their open banking API platform, which securely connects to a user's bank accounts.
So they get a complete picture.
Yeah, super comprehensive, super up-to-date, and then all that juicy data gets fed into Brawley's risk engine.
Okay, so the risk engine, that sounds pretty important. What does it do exactly?
So think of the risk engine as the brains of the operation.
Okay.
It takes all that financial data from Basic and uses some really advanced machine learning algorithms to figure out how risky a borrower is.
Like how likely they are to repay the loan?
Exactly. They're aiming for a default rate of around 3.56%,
3.56%.
which is way lower than what you see with those payday lenders.
Oh, yeah, those guys are notorious.
Yeah, their default rates can be like 10 to 15%.
Wow.
So Brawley's doing pretty well on that front. And it's all thanks to those, fancy data analytics they're doing.
Okay, so it's not just about looking at someone's credit score then.
No, no, it's much more dynamic. They actually have this whole risk scoring system.
Oh, tell me about that.
Okay, so it's a scale of 0 to 15.
All right.
And based on your score, they figure out the maximum loan you can get.
So like the higher the score, the more you can borrow?
Yeah, something like that. They have different risk categories,
Oh.
like ultra low, all the way up to reject. And each category has different loan amounts attached to it.
So it's really tailored to the individual then?
Yeah, that's the goal. The risk engine makes the whole experience way more personalized.
And that's all happening automatically, right?
Right. Which means potentially faster approvals. Cause decisions are based on real-time data, remember?
Makes sense.
And on top of that, it helps them spot potential fraud.
Oh, right, because they can flag those high-risk profiles.
Exactly.
And it sounds like this risk engine's built to, like, grow with them.
That's right. They've got plans to expand into other financial products down the line.
Like what?
Maybe things like secured loans, or even operating in different countries.
So they're really thinking ahead.
Absolutely.
Okay, so it sounds like data is like the foundation of their whole lending process. And it's how they're able to pull off this national, personalized, and risk-managed thing they've got going on.
Yeah, it's all about that data-driven approach. They keep talking about adaptability.
Right.
That's what they get from Basic and the risk engine, right?
Yeah.
It tells them not only who to lend to, but also how to manage potential defaults,
Oh, wow.
and even how to target their marketing in different parts of the country.
So they're using data for pretty much everything.
Pretty much.
It sounds like a lot of this is automated, too,
It is.
which I guess makes them more efficient.
Exactly. Automation is key for keeping those operating costs down,
Mm.
especially when you're going for national scale.
Okay, so how does all of this translate into, actual revenue for Brolly? What's their business model?
So they have this really interesting recurring revenue model.
Okay.
They make money by charging a 5% service fee.
Yep.
But it's not just a one-time thing. They charge that fee every time a loan gets renewed, or if a borrower takes out a new loan after they've paid off the first one.
Oh, smart.
Yeah, so the same money that's being lent out can generate multiple fees over time.
So the more people use the platform and the more they, keep coming back to borrow, the more Brolly earns.
Exactly. It's
Yeah.
a really clever way to scale the business.
Okay, so we've talked about all the tech, the business model, but let's go back to that national scale thing again.
Right.
Why is that so important for Brolly?
Well, think about it. A national pool of lenders just means a lot more money available to lend out.
Right.
Just basic supply and demand. They've got a much better chance of meeting borrower needs no matter where they are in the country.
So they can avoid those growing pains that other platforms had to deal with, where there's just not enough supply to meet demand in certain areas.
Right. That's the big one.
And they've also talked about how borrowing needs and lending activity can vary from region to region.
Yeah, I have.
So a national platform can kind of smooth things out, make sure that the money's flowing to where it's most needed.
Yeah, it balances things out,
Yeah.
makes the whole marketplace more stable and efficient.
Okay, so what about the market opportunity here in Australia? I mean, who are they targeting?
So they've identified a pretty significant market. It's over 5.17 million consumers who are looking for credit options outside of traditional banks.
5.17 million, huh?
Yeah, that's a lot of people. And it includes a lot of, gig workers, freelancers, people who might not qualify for loans from regular banks.
Oh, I see. So they're filling a gap in the market.
Exactly. And their goal is to get like 200,000 to 300,000 borrowers within the first few years.
Ambitious, but doable, it sounds like.
Yeah, for sure.
So what makes Brawley a better option compared to, the other things people might be considering? Like, what about traditional banks?
Right. So compared to banks, they're focusing on much faster approvals.
Okay, so that data-driven underwriting and risk engine really comes into play there.
Right. And they're also trying to give lenders better returns than they'd get with a regular savings account.
So it's a win-win for both sides.
Exactly.
Okay, what about buy now, pay later? Those are really popular these days.
Yeah, those are everywhere. But
Yeah.
Brawley's really big on, rigorous compliance and transparency.
So basically they're saying we're playing by the rules and we're not hiding any fees.
Yeah, exactly. And then compared to those payday lenders, well, their default rates are way lower.
Right, we talked about that.
Yeah. And they're positioning themselves as a more ethical alternative.
So a more sustainable way to borrow money.
Right.
Compliance is a big deal in finance, especially on a national scale. What are they doing to make sure they're ticking all the
They're
boxes?
taking it really seriously.
Yeah.
They've partnered with EY and Frankie One,
Oh,
remember?
yeah, yeah.
That's all about making sure they're following those AML, CTF, KYC, and DDO regulations.
Okay, so all the acronyms.
Yeah, all the important stuff. But, it's not just about avoiding fines or anything.
Right.
It's about building trust, both with users and with potential investors.
So this national strategy, the tech, the dual operating model,
Right.
it sounds like they're really setting themselves up for some pretty big things in the future.
Oh, yeah, for sure.
Yeah.
Their long-term vision it's way beyond just Australia.
Oh, wow. What are they thinking?
They want to be a major player in the Asia-Pacific region by 2030.
Wow.
And eventually they want to become like a full-blown financial platform,
Right.
offering a whole suite of products and services.
Way beyond just microloans.
Exactly.
So to wrap things up, what are the big technological takeaways here? What makes Brawley unique?
I think the biggest thing is their dual operating model.
Okay.
It's the core of what they do. And it's all made possible by that really well-designed tech stack they've got.
So the payments, the security, the data analysis, all that stuff.
Right. Yeah, it all works together seamlessly. You've got the secure and efficient payment processing from Manuva, the identity verification and AML from Frankie One, the real-time data analysis from Basic, and of course the risk engine.
The brains of the operation.
Exactly. And they're all connected, working together to support this huge national marketplace.
And going national right from the start, that was a really smart move, wasn't it?
It was. It's how they're tackling that whole chicken and egg problem
Yeah,
by connecting borrowers and lenders all over the country.
right from the get-go. Maximizing their reach, their impact.
Absolutely. It's a real differentiator for them.
This was a fascinating look at Brawley. It's amazing how much technology goes into building a platform like this, and it makes you wonder how these kinds of technology-driven platforms are going to shape the future of finance. How will they affect access to capital and financial inclusion on a national scale? It's definitely something to think about. If you're interested in learning more about Brawley, their tech, maybe even investment opportunities, or their social impact work, we've got some links for you. Thanks for joining us for another deep dive.